Hey, what's going on? Chris here. I want to bring you all an update on Bitcoin. Right now we're at $10,658. We're up 0.18%. What I'm going to do is get into some of my targets for you. We're at some very key areas right now. And if some of these areas don't hold, guys, we definitely could drop down into that $7,000 range. So what we're going to do, we're going to formulate a plan for the downside as well as the upside. Because remember, you want to really protect yourself. Guys, this is looking like a blow off top here. As you can see that, and you can see we had very high volume at the top of this, and it was followed by a bearish engulfing candle. So I want you to be aware of that. What we're looking for now is to see if we can hold this 20 EMA, which we have defended for quite a while. As you can see that basically all the way through this uptrend, we only lost it a few times. So it's something that we want to pay very close importance to, and we want to see if we can form and close this hammer up above this 20 EMA today on good volume, and then tomorrow we would need confirmation to the upside to try to get back up above this 0.236 there at $11,259. And if you guys like these videos, like, subscribe, hit that notification bell. I appreciate you all being here with me today. But this is what we have to realize. This market, it's a trader's market. Guys, the volatility, it's not even necessarily a hodler's market because these swings are so aggressive. I mean, in the matter of a day, you can see Bitcoin go up or down $2,000. It just lost recently. What was it, guys? It was a flash crash, $2,000 in 5 minutes or something crazy like that. This is a trader's paradise, and you need to be able to play both sides of the market. You need to play the upside, the downside, and prepare for both sides of the market. You know, you can't just say, I'm only going to trade up, because this market, as you can see, the volatility to the upside as well as the downside is just as great to the upside and the downside. You're going to see massive swings in this, and you need to be able to capitalize on them and be able to accumulate. You know, if you want to be a long-term holder, try to accumulate as many as you can without going into your bank account. You know, that's what you want to look for in this market, and that's what I'm here trying to teach. You know, if you are just a hodler or whatever, that's fine, and you want to learn this stuff, but as hodlers, I don't understand why some people get so upset at people who are trading this market. This is what markets are for. They're to trade. And when you see clear signs of when you should be getting out or when you should be getting in, you know, in my opinion, it's intelligent to be able to take those things and protect your capital, especially like in a bear market, guys. Capital is king. And when you're in an uptrend and you're in a bull market, it's good to be holding those coins. Right? So if we're having lower highs and lower lows, why would you want to be holding on to something that can depreciate 95%? I'm not talking about Bitcoin, it didn't get down 95%, but the altcoins, some of them were down 96, 97%. Hodling doesn't make sense. Think how many more you could buy. So that's what I'm here for to do, guys. I just really want you to look at the market in a different way and think of the emotions that you're having going through these big swings where Bitcoin can gain or lose $2,000 in a day. I mean, really, it's not good for your health either, guys, and that's what you got to realize. Like, really learn this stuff and become unemotional with it and protect yourself. What you want to do is, if you lose on a trade, which you're going to do a lot, you want to cut it as quickly as possible. And then when you're having something that's winning, you want to let it run and let it ride and then put those trailing stop losses in. So even if it goes against you, you're locking in profit, then you look for the next trade. That's what it's all about. So, you know, guys, I'm going to dig into this with you. I'm going to try to make it a shorter one, but I wanted to let you know that, like, really learn this stuff so you don't have to go through all these emotional things where, you know, I'll see some hodlers, they'll get so upset at people who are trading this market. This is what it's for. If you don't want to trade this market, why are you watching trading videos? I guess is what I'm bewildered by sometimes, but I don't know. All right, guys, sorry, that's out of the way. What we're looking at here, we're taking from our swing low to our swing high. So we have had a retracement now. We are trying to form this hammer candle. We wick down to this 0.382 at 97.13. That's typically a good spot to have a nice little bounce off of. We're going to have to see if we can close up above both that 0.382 today and that 20 EMA. And then what I would do is look down to this area where we'd look for support about that 89.11. If we don't get a nice bounce here, or if we get a really weak one and then we start to roll over again, guys, I'd look for that 50-day moving average. We need to see if that will hold because that's coinciding with this support as well. And that's going to be around that 89.91. After that, we'd look to that 0.618, which is going to be around that 72.16. That area is also coinciding with the 100-day moving average. So all this area is going to be a hot spot for us, and we're going to have to see where we get a bounce from. But what happened was, guys, people don't understand the importance of being able to read these candles. It's like reading music. So after we've had a massive push up here, on some of the highest volume that we've seen, so this blow off top, then we have a bearish engulfing candle, and that's a sign that we potentially could get pushed to the downside. So now what we're trying to do is find that nice higher low so we can potentially make another move to the upside, and then we'll have to start working back through these time frames, or I'm sorry, these price ranges to that 0.236 right here, then also up around that $12,372 is what we're looking at. Now, something that is a little nerve-wracking here, and I want you to be aware of it. So our RSI is at 54 right now. If we are to get pushed to the downside, we're in such a neutral area, we could run really nice and aggressively to the upside if we do close this nice hammer candle and we get follow through. But we also could drop very fast and aggressively as well, because you've seen Bitcoin before around 20 on the RSI, 15 on the RSI. I'm not saying it's going to go that low, but we have the ability now. It's not like we're seeing this hammer take place when the RSI is on 20. Make sense? So those are the things that you do want to pay attention to and really look at. Okay, so now we're trying to find that next little reaction and see where it goes up to. What I wanted to do next was bring out our stochastic RSI. We're going to go through a few different things, and I'm going to show you why we could tell that a sell-off was coming. Let me get the fib out of here. All right, so our stock RSI, and let me know what you all been doing with Bitcoin. So our stock RSI, this is a good thing right here, guys. On the 1 day, we're at 0 and 4.7. So this would be a nice spot if we can form that hammer candle off that 20 EMA with a stochastic cross. That's the confirmation and the confluence that you're looking for. We want to look for confluence the best that we can. So we're in extremely oversold conditions right there. Could we still go a little bit lower, guys, and be pegged out down in here? Yes, it can happen. Okay, we want to look at that. Next one, I want to go to the Bollinger Bands, and we're going to look at this blow off top. And we're going to see if the Bollinger Bands were telling us. Do you see how we snuck out of these Bollinger Bands here? Typically, guys, whenever you get out of there, there's going to be a sell-off, and a lot of times it goes back to that middle band. And the middle band right now is at $10,359. Okay, so let's keep our eye out on that, and that's also where this potential hammer or doji candle could be forming, depending on how it closes today. So that's another sign that was telling us, hey, this may be the time to jump on out of here. Okay? And let's see if I have any other ones I want to show you here. We did our Bollinger Bands, our RSI. Let's hit our MACD quick. See what that in the histogram are looking like. So we have had our bearish cross right here, guys. It's happened, and our histogram's starting to tick to the negative. So, this is just times when you want to be careful. You want to pay attention. Can the MACD slightly go down, then come back up? Yes, anything's a possibility. But this is the time you do want to protect yourself, because anything really can happen. We're kind of in that neutral area. Like I said, on the RSI, we could get a bounce off this 20 EMA. We've been getting a bounce off it basically throughout this whole move, so that's the first area I'm going to look. If not, we're looking down to that 88.40, and then it's going to be down here around that 0.618, which is also around that $7,000, guys, $7,200, $7,300. But, this is what I just wanted to bring to you, that we have to capture these trends. Like, this has been a beautiful intermediate term uptrend. This has been wonderful. Higher highs, higher lows. So now we have to see what happens. Could we chop around in here for a while before we come back up and try to attempt to break this? Yes, around that $13,000. But you have to be aware of when you need to take profit. And one more thing I just thought of real quick I wanted to throw up here for us. So on the RSI, I want to see if there's any divergence that was taking place. Wasn't near as bad as like Litecoin, some of these other coins, but you can see our RSI was up around 90 and our price was at 8,600, and then we went all the way up to over 13,000 and our RSI got up to 90. So we basically almost had like a triple top here on the RSI. So our relative strength wasn't gaining. So that was another sign, guys. And when you get up that high around that 90 and you're seeing bearish engulfing candles, these are the things that we want to identify so that we can say, hey, this may be the time to get out of your position and protect that cash. And it's all about that accumulation. So when you protect your cash, and you're basically sitting in cash in your account, you can watch this price action. And remember, guys, you can always jump back in. But if you have a shot of buying Bitcoin again at, say, even $10,000, as opposed to FOMOing up in here around that $13,000, or you protected yourself and you got out there with a nice stop loss, then you have so much more money to be able to accumulate more. And if you want more cryptocurrency, why wouldn't you want to trade for it? Like I said, guys, I've talked about this before. I'd rather pay taxes on profit than not have any profit at all. I mean, that's just what it is. So many people get upset about that, but you know, that's just my philosophy. It's what's worked for me so far, and I want to help share it to as many people as I can who want to listen and learn this stuff and learn how to trade, because being a trader is completely different than gambling. We're trying to put the odds in our favor the best that we can. That's the whole name of the game, is to put the odds in your favor and then react to that. And like I said, if it goes against you, get out of it real fast and move on to the next one. That's the best thing that you can do. So wanted to bring this to you all. I hope you're having a wonderful day. If you like these videos, like, subscribe, hit that notification bell. But don't be afraid to trade. Protect your money and do the best you can, guys. Take care, my friends.